When I first started trading, I thought strategy was everything. But then I realized, without understanding pips and lot sizes, I was risking way more than I planned, and that's why my account kept blowing up. If you've ever been confused about how to calculate pip value or lot size, then this video is for you. I'm going to break it down step by step in the simplest way possible so you'll know exactly how much you're risking before you click buy or sell. Let's get right into it. What exactly a pip is? A pip is the smallest unit of a movement in the price of a currency pair, and for most pairs it's measured in the fourth decimal place, while for yen pairs it's measured in the second decimal place. In simple terms, a pip shows us how much the market has moved. And now if we remove this one and we start to explain in a practical way, in the fifth toolbox we have this projection and we have long and short. So this is the option if you want to measure risk to reward ratio and if you want to measure the pips, which is this number here in the middle, not the stop, but the pips are here. If you want to go long, it means that you have this long position here. If you want to go short, it means that you have this short position here. The risk to reward ratio is here in the middle, and then the stop loss and take profit. So how to measure the pips is the question. In every currency pair, like GBP USD, Euro USD, New Zealand dollar USD, is the fourth one after the point. So let's say you want to mark the movement from here to here. The fourth one after the point is 5, number 5. So 5 is 5 pip. So before the 5, if it's any number, it means that there are 45 pips in this case. So after the point, you need to count 1, 2, 3, 4, and then that's the number of a pip. If that number is 1, it means that is 1 pip. And if that number is 5, it means that is 5 pip. And if the number before the fourth one is 4, 1, 2, 3, 4, 5, it means that it is 55 pip, 45 pip, 35 pip. We don't have to count like that, but it's good to know the practical way, the manual, not the automatic form. So you know how to calculate it. And if we go to this kind of tool, it's going to automatically tell you the pips. So here on take profit is 38.6 and on stop loss is like 20.3 pips. Let's remove this one because we don't need it. So let's say you want to enter a position. You want to enter long in this case. You need to measure the pips of stop loss. You need the stop loss because you need to define your risk. How much you're willing to risk, how much you're willing to lose if the price goes in the wrong direction. Let's say you have $100,000. You need to divide that $100,000 with the exact risk percentage. If you want to risk 1%, it means that you're risking $1,000. And let's say divided by 100 times 1%, $1,000. So you're risking $1,000 in that kind of trade. And then you need to see what's the stop loss you entered. Okay, stop loss below this low, it's 18.7. We open calculator and we divide $1,000 divided by 18.7 and we get the exact lot size you want to risk. Now going into the exception of the pip calculation that we did before, with all the forex pairs, this is the only exception in the forex pair. Not only this USD JPY, but all the pairs that involve JPY as a currency pair. The only difference is that the pip is staying not only in the fourth number after the point, but the second number after the point, and that's all. So here is the point. We count 1, 2, and this is the pip number. And the number before the pip says that are more than 9. So There are 50 in this case. Whatever the price, whatever number is in this kind of position here, in the number after the point, then it means that is the pip calculation. How to calculate the pip in USD JPY? So let's suppose we want to enter long or short. We don't have to worry about, because here the position has it already, and in this case is 22.7 is this middle one here. But you always need to know in a manual way how to measure pips in the USD JPY. Let's say you want to take it from a point you like to a point you also like, and you're gonna measure the pips. All right, so from the point to the point is 91 pips. Why? Because after the point we have 1, 2. This is the point number. We have 1 here and 9 before. Together is 91 pips. The number before the 9, it shows how much pips are in total. In this case is 91.4 pips. And if we want to enter a trade, enter a position, and we want to calculate the risk, how much are we willing to lose? We have $1,000 here. Let's say we want to lose $1,000 a trade, and we divide that for the number of pips that is the stop loss. So we set our stop loss however we like. In this case, below this low is 22.7, and we go to calculation. $1,000 divided by 22.7. We have 44 lots to enter in order to lose $1,000 if the trade goes wrong. Okay. Now going into the futures. Here we have the S&P 500. It's kind of different from the Forex pairs, the future, when it comes to calculating the pips. But here, if we see this middle one, this middle number here, it says 126. We just have to put the dot. We have to put a dot or a comma after the second one, after this number that says 2, and then it becomes a pip. But when it comes to calculating the risk, you need to divide that by 50 on S&P 500 and by 20 on Nasdaq. Let's take an example. Here we have 126. From this move to this move, from this open position to this close, we have 126. 126, and we have to put the comma after the number 2. If we put the comma after number 2, it becomes 12.6. And 12.6 is the actual point, but we need to multiply that by 50. We go to the calculator. 12.6 times 50 is 630, the number. And then this kind of number, we have to divide. We have $1,000 to risk. We have to divide by 630. 630, and it becomes 1.58, the actual lot size. That if the trade goes wrong, it means that you are risking $1,000 and you are losing $1,000. This is the Nasdaq mini futures. If we go long, we have this 29.9. From this open to this close, we have 29. We have 35.3 right now. And then we have to put a comma after the second number. 1, 2, the second number is here. That says 5. We have to put a comma, and it's 35 pips. When we want to calculate for Nasdaq, we have to multiply that by 20. So we go to 35.3. 35.3 times 20 is the number 706. Now we want to risk $1,000, and we put $1,000 here, divided by 706. Then we have 1.416, which is the lot size. The lot size, if we put 1.416 in the MT4 and we press buy, it means that when the price goes wrong, in the wrong direction, you're losing $1,000 on the Nasdaq trade. That was all on calculating the pips in Forex and some major futures. The next video is going to be on lot size in order to combine them together and be able to trade properly. So thank you for watching and I'll see you in the next one. Peace out.